Well, good morning. Tony Virtue speaking, Virtue and Partners, with our regular monthly update. And I guess news still dominated by interest rate rises. We're up to 2.35% in Australia, an increase which was predicted at 50 basis points earlier in the week. Canadians have gone up 75 basis points overnight, and this is very much a global pattern, really reflecting a recovery in markets. And again, I emphasise you only lift interest rates if the world is looking a better place. Yes, there are certainly concerns about inflation, but again, I think we're seeing some of that beginning to taper over, and as we look towards next year, that will decline quite quickly based on the RBA data that is there. We had a good CPI number out yesterday, so country 0.9 for the quarter, 3.6 for the year, so that's pretty much trend. And the way I read this now is that we will be coming back to a level of normality, certainly by next year, as net migration goes up. We're looking to increase that from 160,000 skilled to 195,000 skilled, as we get the bottlenecks sorted out with the access in and out of the country, which is a great bone of contention for all of us. That will relieve some of the supply shortages we have at the moment. But just through earnings seasons in Australia, and they were pretty strong. Dividends are growing, and the risk-free rate going up is meaning that anything that is linked to RBA rates, particularly for retirees, is looking better. Now that's important because deeming rates are staying at 2.25 at the higher threshold, 0.25 at the bottom end. The government today is actually enacting the downsizing rules that we spoke about for everybody over the age of 55 now, to be able to downsize and put more money into superannuation. So the intent here is to give people the choice to build up these balances, get a consistent income stream down, and de-risk these portfolios wherever we can. Now we can do that as interest rates rise, because that means that term deposits are now 3.8, 3.9%, the Latrobe's of this world in the 5s, the annuity is now in the high 4s. So we have real optionality as opposed to taking equity risk in what we're doing. As and when interest rates do look like they're peaking, equity markets are a forward-looking indicator. We saw that overnight with quite a good run in America. So the moment that it appears that rates are peaking or can be seen to be peaking, that may well be the start of a rally in growth assets. The graph there shows, in particular, the effect of the Ukraine-Russia matter on energy prices in Europe, and just what a significant effect that has had. We've been affected, but not nearly to the same level, and to some extent we've perhaps sadly been a net beneficiary of all of this. But again, as that comes to a head, as they go in towards their winter there, and there'll need to be some kind of political resolution, that again should reduce energy prices there, and again be a positive. So I think the way to look at this, we're coming into spring in Australia. COVID appears to be manageable. Doors appear to be opening now. Yes, the cost of living is higher, but particularly for those of you who've retired, there are ways to increase your income now to manage that, and that's something that we are absolutely focused on. We've organised our Christmas functions both in Sydney, but also now in Brisbane and Melbourne. So looking forward to seeing as many of you face to face as we can. Certainly those of you in the country, Zoom is working well, and it's helping us to manage our time. And we're increasing our resources internally to make sure you have the support and services that you need. A lot on our website, so do have a look at that. I look forward to talking to you all next month. Tony Virtue, when experience pays.